character to a great, that formed their character to a great deal. That they had a lot of insecurity, about financial insecurity due to that. Excuse me. And my dad became a college professor in accounting at Rice University in Houston. And they both met my mother at that University of Rice. They went to Rice, and then he went and got an MBA and then taught at Rice. And when they started going PhDs, he didn't want to get a PhD, so he went into he went and he became a chief financial officer and eventually a CEO of a hospital management company that was public, named LifeMark. And I had no business background. I was looking for the meaning of life. So I went back and forth between two universities, Trinity University in San Antonio, where I studied religion, and University of Texas in Austin, where I studied philosophy. And I actually went to each of those universities 3 separate times. I transferred between them, back and forth, back and forth, back and forth. And I eventually just stopped trying to get a degree, and I've got 120 hours of electives of just courses I was interested in. And if you counted all the classes I audited, I probably have 160 hours. And but no degree, much to the disappointment of my mother, but very high grade point average. So that's my background there. And as I talk about in the book, I move into a vegetarian commune, really called a co-op, but it was communal living when I was 22, 23, thereabouts, right in that area. And I wasn't a vegetarian when I moved in, but I became a vegetarian. I had sort of a food awakening. I began to realize for the first time that what we ate affected our vitality, our health, our longevity, how we felt, our immune system. And then I kind of found my meaning of life. I heard the hero's journey, the call of the hero's journey, and that led me to start Safer Way, which was the first smaller store. Renee and I lived in that store above it, and then Whole Foods after that. And so that's kind of I played sports. I played basketball in high school, a year of college basketball as well at Trinity, and then I played City League for years. So I've always been very competitive. I have hobbies. I'm a long distance backpacker. I've hiked all around the world, including doing the Inca Trail in Peru, which was amazing. And many, many trails all around the world. I love to go long distance hiking. So from there, I'm happy to talk about anything.
Good. So one of the things when you go through make sure that people see that the whole story, the book, there's a lot of entrepreneurial experience, and people go through there's a part that you talk about the hardcore business challenges, merger, acquisition, growth, margin, activist, unions, and there's a soft core, culture, leadership, purpose, value creation, interdependence, stakeholders, that sometimes is forgotten and or left behind, because most of the leaders end up focusing on the hardcore part, which is the challenging. So there's a story, and you repeat that story quite often. There's a huge flood that happens during this process, and the impression I have, there's so much awakening on that, because there's so much unconscious intention to do something better for the world, a clear purpose, to care for the people, like Simon Sinek. It's a clear example of a leader that eats last, making sure that, the team, the customers, they're always well served and value created, understanding, interdependence, the stakeholders, and the flood. Share a bit about the flood and how that, everything came together, because I think this is so powerful. I feel like almost reading through the story again, because you shared that in a couple of different books, and the story always adds up more content.
Yeah, well, I shared it again, Thomas, just 3 weeks ago. I did a TED talk.
Cool.
And that hadn't been posted yet, but it came off really well. I only had 10 minutes, but I talked about win, win, win.
Yeah.
And I tell the story of the flood as something that helped awaken me from business being, I thought it was just a hyper-competitive game, a win-lose game. You're focused against your competitors. You're trying to win. And the flood, it helped me awaken to this idea of business is not a win-lose game. It's primarily a win-win-win game, because I didn't have the language for it back. This is 1981, Memorial Day, 1981. Austin, Whole Foods experienced the worst flood that Austin had seen in over 70 years. And our store was 8 feet underwater. So we were basically, we were dead. We were bankrupt. And except that what happened the next day was sort of amazing, because I went in to help clean up the store, and there were dozens and dozens and dozens of people that were helping us clean up. And our team members, of course, were there, but also our customers and our neighbors, they were helping us clean up. And they were helping us clean up because they loved our store and they didn't want us to die. So they were pitching in to help us survive. And I like to say Whole Foods was resurrected from death, because there was this interconnected group of stakeholders, customers, employees, suppliers, investors, and the larger community as a whole, that resurrected us from death, because, or from a near-death experience, because they cared about us and they saw our surviving meant we were winning, but they were winning too. And that changed the way I began to think about business and the way I thought about life. And so what I discovered was that business could be this win-win-win game. And by that, I mean good for you, good for me, and good for everyone. And that's kind of ever since then, I've begun to try to apply that philosophy to business. And then I've kind of discovered it's more than just business. Win-win-win is a universal ethical system. And I always challenge people when I talk to them about it. Show me a situation, any situation, that's not the appropriate way to show up in that situation. Looking for the good for everyone you're interacting with. It's a theory of human interaction that seeks mutual benefit and mutual gain for everyone. So the flood was, very cathartic in that way, and it's a good story. So I only had 10 minutes, but I managed to jam 4 stories in 10 minutes. The flood was the first one.
Yeah, that's what we learn at TED Talks, because you gotta send out the message and make it powerful, impactful with the listeners. So here's the other thing: you going through the book, you see that you are a constant learner. You're always learning. You're always learning more and more. You have a deep curiosity, and that actually brought you to say food, this and how you serve, and learning from other people, being curious how other people actually add value. Always look for excellence. Everything in the store was like, looking for excellence, a huge service to the customer. What, in addition to that, what else do you, as an entrepreneur, as a successful leader, what else did you need to build Whole Foods? Because we don't have everything, but what other things? How do you manage that? Any gap that was available was out there?
I mean, there are certain predictable, excuse me, there are certain predictable stages that any growing business is going to go through. And first, you have to have a business. You have to be creating value for customers, and that's never stops. So if you can't do that, if you can't create goods and values and services that people value, your business is not going to succeed. So it doesn't matter if it's conscious or not. It doesn't have a good business strategy or a good business model, it will fail. So that's the first thing. But we were selling natural and organic foods. And that was very, very, very tiny little niche market when we got going in it. In fact, it was so small that we were basically overlooked by all the supermarket chains. They just thought we were, there's one guy told me, a venture capitalist who turned us down for investing in us, told me, he said, "Hey, John, I just think you're a bunch of hippies selling food to other hippies. And that's a really small market. I just don't think it can grow very big. And if it did, I just don't see how you would compete with the Safeway and the other supermarket chains. They'll put you out of business." So first you have to have a niche where you're creating value for people. Secondly, you need capital. I mean, it's the reason why it's called capitalism is you need capital. And we started out with capital invested from friends and family. And then we did that. For about the first 10 years, that's all we had, plus our retained earnings. So we were profitable. Safeway lost money its first year, but after that, we were very profitable, and Whole Foods was very profitable. And all our retained earnings, we didn't take much out. We just kept plowing it back in the business for growth. And then, but eventually, we were growing. We wanted to grow faster than our retained earnings would allow us, and we were borrowing money from banks, so we were leveraging a little bit. But then we took venture capital money in, and when you do that, you're kind of like what's called in American in English a little. So this may not mean anything, but it means you're on the clock, because
Yes.
they only want to keep their money in you 5 to 7 years, and so you have to have an exit strategy for these venture capitalists to get out. And ours was you either sell the business, or you do initial public offering. And I wanted to do the IPO because I wanted to build a business. I didn't want to just build it and sell it. And so we raised some venture capital money, but the VCs, again, I use it in a metaphor. They're like hitchhikers with credit cards. And as long as you help pay as long as you get them to where they want to get to, a successful financial exit, they'll help pay for the gas of the car. But if you don't get them where they want to get to, they're very likely to hijack the car and hire a new driver and throw you out on the side of the road. So we wanted to get them out of the car. And so we did our initial public offering in 1992. It took us 14 years to get to 12 stores when we did our initial public offering. So even less than 1 store a year, 12 stores after 14 years. But then when I retired after that, 30 years later, we had 540 stores and over $22 billion in sales. So with that money, we not only got the capital from that initial public offering, but we also had a currency. We could use our own stock to buy other companies with that, and then sell that stock on the public markets again. So we did that several times and sort of bought companies that were similar to Whole Foods. And that gave us something else that you need in order to grow. You're always going to hit these, like an ecosystem, you're going to hit certain limiting factors. The one limiting factor is, do you have a good plan and a good business plan, a good business model? Secondly, then do you have enough money to grow it? And then third, do you have enough talent? So do you have enough intellectual capital? And the fact that we were able to acquire these sister brother-like companies that were similar to our own, we were able to get talent from those acquisitions. And we didn't think, Whole Foods never had a huge ego. We didn't think we were better or smarter than everybody else just because we were growing faster. We just assumed everybody knew certain things we didn't know. And so we would try to learn from them. And we'd take the sort of best practices. What were they doing better than us? And then we'd copy that and put it into the entire organization. And so that just continued on and on and on. And we kept getting better at what we were doing. The collective intellectual capital of Whole Foods continued to grow and grow and grow. And guess what? We became a bigger, more successful company than Safeway, or the companies that we weren't supposed to be able to compete with. At one time, I think it was back in 2000, and about 10 years ago now, Whole Foods had the highest market capitalization of any grocery company in America, except for Walmart. We were number 2, more than anybody else. That was when the other supermarkets really kind of woke up to our success and started to go after us more competitively.
So in Miami, we had a store that was called Wild Oats, and that was the closest we could get, like Whole Foods. And I remember at Alton Road, and there's a story on this acquisition with Wild Oats. And I think this is a very interesting story, because it's, how do you actually acquire business? And now you're saying there's talent that you can bring in, but also there's a cultural aspect. how you guarantee that the culture actually sticks, that you maintain that culture throughout the acquisitions, not even only acquisitions, but you open new stores in a different region, because the Whole Foods footprint was huge, the
Well,
whole country.
those are two different questions. When
Yes.
we went to a new market, we always seeded that. We used I'm a grocer, right? So I used a food metaphor. If you want to create new yogurt, you take the culture from already existing yogurt and you
Okay.
transport that to milk and get the right temperature, and then that yogurt will convert the milk into yogurt as well. So that's the way culture spreads. So we would seed anytime we go to a new market. We would make sure we brought in the store team leader, and the other team leaders would be people that came from other stores that already had the Whole Foods culture. And then they'd incubate it into new team members, and then the culture would take hold. Now, when we did an acquisition, that was a little trickier. First of all, we didn't really try to force their culture to change, because people, if you try to force something to change, people will resist it. They'll protest against it. So instead, what we did was we let them retain many of their practices that they like to do, but we just insisted on a few things. We insisted that they adopt the Whole Foods team system, because we were organized into teams, and that our core values and our mission and purpose, they had to get our mission and purpose, our core values, and then some of our leadership principles, like teams. And then what happens is that Whole Foods had such a good culture. I mean, Whole Foods was named one of the 100 best companies to work for in the United States for 20 consecutive years, up until the day Amazon bought us, and then we were no longer independent, so we weren't eligible any longer. And we had such a powerful culture that we didn't have to force anybody to change. They wanted our culture. But I also say that what I found, when you wanted cultures to really stick, when you do an acquisition, I found that people fell into three camps on the people that the team members for the companies we bought. Mm-hmm. About 20% of the new team members immediately thought this was the greatest thing they'd ever seen. They loved Whole Foods. They thought we were so much better than the company that we bought, that they just wanted to be like Whole Foods as quickly as possible. Then you had about another 20% that thought this was the worst thing that had ever happened, that we were going to wreck everything. We did everything the wrong way. We didn't do it like they were doing it. They didn't want to change. And so they didn't like us. And then the other 60%, they're just on the fence. They don't know. They're just trying to go along to get along. And they take a wait and see attitude. So what I figured out, the way to get the culture to spread quicker, was you take the 20% that are the most enthusiastic, and you empower them, you promote them, you put them into leadership positions. And then what happens over time, their enthusiasm combined with Whole Foods's, integrity and our commitment to good values, the people on the fence begin to see, wow, I'm making more money. I'm having more fun. I have more freedom to create. And they begin to embrace the Whole Foods culture. And so you reach a certain point, which takes, in my experience, about 2 years. It takes about 2 years for that sort of, for the tipping point. And the tipping point is when the 60% begin to convert in. And so now you're about 80% that like the culture. You still have the 20% that hate it. But what begins to happen then is that the culture begins to reject the 20% that won't sign up. And it's not that they are forcing them out. The 20% no longer feel like they belong. And so they begin to select out. Some of them convert, but some never do, and they just leave. And a few that are too frightened to either leave and get a new job or to convert, they just stay there kind of grumpy. And eventually the culture acts like an immune system, and it'll throw them out after a while. After, you'll give them some more time, but eventually they'll either leave on their own, or the culture will just you know, like a splinter, it'll
Yeah.
it'll force the splinter. It'll sterilize the splinter.
Mhm. So growth was something very constant on the development of Whole Foods. There was never a stop, say, well, we have enough. But at the beginning, at the first store, and then, growing, the initial stage of growth, when there was a merger, the first merger, there was like a challenge to say, we have enough.
No, I think that's the wrong way to think about it, to
Yeah.
be honest. So growth is absolutely essential to every business. Don't think of growth as like, don't use a cancer metaphor. Think of it as continued evolution, continued change. Sometimes that means growth in sales. Sometimes it just means you're evolving your practices, the way you do things. You're getting better, you're improving. You have to always continue to improve. You can't sit still in business. If you do that, there's going to be new entrepreneurs and new innovation. It's like it's an infinite game. It just goes on and on and on and on and on. And if you don't want to play it anymore, then you should get out, because the organization itself needs to continue to grow and evolve. But the reason why some actual growth in sales and revenues is important is because that's how people can get higher pay. That's how they can get, as you grow, you create new opportunities for new leaders. And so it's very important for morale that people can look and say, this is a company that I can grow in. This is a company I can get promoted in. If I work hard and do a good job, I can go from bagging groceries to becoming a team leader, to becoming an assistant store team leader, to becoming a store team leader, to become a regional leader, and then maybe even at the very highest level, a corporate level, regional president or a corporate executive. So you have to have that. And Whole Foods we'd always celebrate those who kind of rose from the very bottom up to nearly the top. And many, many people did. They became heroes in the culture and the stories that were told about them. So it's very important that people see opportunity, that this is a company. If you don't give them opportunities, the best and brightest, the most ambitious people will leave, because they're looking for, they want to make more money. They want to have higher opportunities. If you don't provide them, then somebody else will. So I want to say that growth is, when a company stops growing, you're going to start losing your best people. They're going to start going to other companies where they think where the grass is greener and they have better opportunities.
So that's interesting, because that brings a huge responsibility for business leaders. We have to grow. If it's in size and knowledge, in capacity, growth is something that is part of
So now
development.
here's something I found out is true for Whole Foods, and I'm not saying this is a magical formula or anything, but when our growth, um, if you grow too fast, if you don't grow fast enough, you can't hold on to your best people. But if you grow too fast, your culture, you're having too many new people come in and they don't integrate. Uh, the culture begins to choke on it's. By the way, I'd say the same thing is true of immigration. If you study the history of the United States has had more immigration than any other country in the history of the world. Just so many people coming in all the time. And if you study the history, when too many new immigrants come in, the culture begins to, they can't integrate it. And so people become more nativist. They become more populist and nativist, and they begin to reject these foreign element coming in. And we just, you're not really Americans. And on the other hand, immigrants create new blood. They create new ideas, new energy, new creativity, new innovation. And so just like a country needs new people to help it to evolve, but too many people too quickly can sort of jam it up. Similarly for businesses, you need to be hiring new people. But we found at Whole Foods, when our growth was started to get above 25% a year, which we had several years, we had higher than 25% growth. The culture began to get loose. It began to people began to feel like it was getting too chaotic. Couldn't keep up. We couldn't train people fast enough. There was chaos. So if you grow too fast, your culture begins to become chaotic. If you don't grow fast enough, it begins to stultify. So there's sort of this sweet spot, Goldilocks, and not too slow, not too fast, just right. and every business probably has to find that sweet spot for their own evolution.
Wow, that brings you know, when you talk about all the acquisitions that you've done, you know, because an acquisition is a quicker jump than just organic growth and opening new stores, right? Is there, you know, every company, if you think, is there a consolidation route that, you know, companies will get bigger and bigger because they buy the new ones, or like Whole Foods just got bigger because some companies have been acquired? Didn't they want to grow, or what was the stage of the other side?
Well, I mean, the answer is different. There's a different answer for every company. I mean, in Whole Foods' case, we weren't looking to sell ourselves to Amazon. We were just being attacked by shareholder activists. You might argue one of the flaws in American capitalism is shareholder activists can take over companies with not owning very much stock. And we were very vulnerable to that. Our stock we kind of peaked, and we were getting more competition. And so our same store sales were slowing down. Our stock price was dropping. We were very vulnerable to being forced to sell. So looking at all the different alternatives, selling to Amazon was the win-win-win solution. It was good for every one of our stakeholders. It's not what I would prefer to do. I would prefer we'd still be an independent company today, but at the time it was our solution to a challenging problem that we couldn't sort out any other effective way.
So on the other hand, if you look at these activist investors, if the shares were not that much diluted, would that have been different? Or is there any other thing? So if you think about the activist investors, how could we have prevented, or how could a company prevent that?
Well, depends on where you are in your evolution. I mean, I've started a new business called Love Life, and I've got not only do I own 70% of the stock myself, but I have 10-to-1 voting rights. So I didn't have that at Whole Foods. It didn't really exist, or I wasn't aware of it. And now I'm aware of it. So that's one way you're making sure the entrepreneurs and the founders can maintain control for a much longer period of time. That helps do that. And since it's all declared, if no investor has to invest if they don't want to, that's the rule. If they don't like that, they can choose not to invest. So that's one thing you can do. And I just think there are other reforms that could happen in the United States for that there's very little incentive in the United States for people to hold their stock long term. The way our capital gains taxes are structured, if you structured it in such a way that the longer you held stock, the less capital gains taxes you'd pay, to eventually, maybe if you held it long enough, 20 years or so, then there wouldn't be any capital gains at all. Then people would have a strong incentive to not be flipping their stock all the time, not just trading, but investing for the long term. And that would really hurt the shareholder activists, because they're empowered, because most people aren't holding on to their stock very long. They don't have any loyalty to the company. They're just trying to make a quick profit. And if an activist says, I can get 30% more for your stock in a quick period of time, well, a lot of people invest thinking that's going to happen. And so you just lose control of the situation.
Well, but if you think about the stock market, you know, the investors that move quicker the shares, or sell and buy very often, they actually offer liquidity to a market. If you hold it very long and everybody would hold it long, would the share price appreciate the same way without?
Sure. Why do you? I mean, you don't need much liquidity to have a stock appreciate. I mean, it's about what the collective market believes the stock is worth, and so, I mean, if you study the history of volatility in stocks and whatnot, you'll see that there were times. I remember one time my dad, he was running a public company, and his company got bought out in 1984. And I remember in the early days, I think they went public in the early 70s, and I was looking at his stock in the paper, and one day they had 0 shares traded. And I said, Dad, what happened to LifeMark? Nobody, not one person bought or traded a share today. And he said, I guess the buyers wanted too much money, and the sellers wanted too much money and the buyers weren't willing to pay it. So they didn't come together today. And it didn't hurt that company. I mean, you don't have, I mean, most private companies, Whole Foods was illiquid for our first 14 years,
Yeah,
but
that's
we
true.
still were able to raise money, knowing there'll be liquidity in the future. So I don't think having liquidity is necessary. Warren Buffett liked to say that you ought to buy stocks as if you're not going to sell them for at least 10 years. So pretend like the market's just closed down and they weren't going to reopen for 10 years. And then that'd be okay because you're betting on the compounding over a long period of time. And so that it's and what's happened is the stock market's kind of turned into a casino where people are just gambling.
Yeah.
There's betting on stock price movements. They're not investing in companies that are creating value for customers and they're compounding over time. So I would argue that the high volatility that we have is a little more than just gambling as opposed to actually investing.
Okay. So anyway, let's go back to the whole story. One of the things that I think a lot of leaders have in their journey is the challenge of who mentors you, who you go for ideas, for exchange. In your journey, who were your key mentors? From where did you get advice throughout this process? Those 40.
Well, my main mentor, and particularly in the first half of the Whole Foods story, was my father. He'd been an accounting professor, and then he'd become a successful businessman in his own right. It was actually really good because he and I got very close. And for about the first 16 years of the company, I really never made any big decisions without consulting with him about them. And I'm sure he saved me from making a lot of mistakes I would have made on my own. I just read a lot because I didn't have any business background. I had taken 0 business classes in university. So I was quite aware I didn't have the knowledge. But then once I got interested in it, I just read hundreds of business books. I found reading marketing books or accounting books or finance books. I found that quite interesting. When you're actually doing business and you're having these problems pop up every day, then these boring textbooks take on a new light. They all of a sudden become quite interesting. And so once you're really motivated to learn, you're not having to take a course and you're worried about getting a grade. You're just opening up books, just absorbing the information so you can do a better job in business. You have a whole different consciousness about learning. And so it's very accelerated and you retain more of it because you're so motivated. So I learned a lot from reading, but then also asking questions of people. I mean, you can learn so much from other people if you'll just listen, ask good questions and listen. And then finally, study your competitors. I used to always go, one of the things that I would always do whenever I travel, I'd go into all the supermarkets and farmers markets. Whenever I go in another country, I'd go see how they were retailing farmers markets and groceries and I wouldn't go in looking for fault. I'd go in look, what are they doing better than we're doing? And what can we learn from them? What's the takeaway? I used to tell my team when we'd go check out a competitor store, I don't want to hear about how we're better than they are, okay? I'm going to concede the point up front. We're better than they are. But you come back and you tell me 3 things they're doing better than us that we should copy. And don't come out of that store until you can find at least 3 things. So they would look at it differently by doing it that way.
Yes. I think that's a different invitation to look not where we are better because we know, it's what can we learn? Open up curiosity.
Exactly.
Make people ask questions, listen more. So with all that in hand, the audience has a QR code to send us some questions if they want. Here's another question I have for you. So throughout those 44 years with over 500 stores, what was the biggest learning experience you had or challenge or something? Say, oh, that was tough. That hurt.
I mean, there's not one. There's so many of them. I mean,
yeah, no.
I know for over 44 years, I mean, there were 4 coup attempts. 4 times I had ambitious or unhappy boards or ambitious executives that wanted my job. And fought them off 4 separate times. There was the flood. There was the shareholder activists. There were the attacks we had on from government. We were attacked by the Federal Trade Commissions. At one point said Whole Foods Market was monopoly, trying to block the wild oats trade. We had less than 2% share of the grocery market, but they said we were a monopoly of the premium natural organic supermarket market, which it just doesn't even exist. They just made it up. And of course, we had a monopoly.
Whole Foods in there.
That's like saying I have a monopoly of being John Mackey. I mean, that was the business we created, but there were no barriers to entry. Mm-hmm. There was nothing we were doing somebody couldn't easily copy. So to say we were a monopoly was absurd, but it cost us tens of millions of dollars to defend ourselves. There was the SEC, the Securities and Exchange Commission, that was trying to get me fired by accusing me of insider trading, not because of anything I was doing with Whole Foods, but because I was shorting the stock of one of our competitors, Wild Oats. And they were saying I had inside information. And I didn't have any inside information. I shorted them, though, when Whole Foods was having a bad quarter. So I figured, we're having a bad quarter. They probably are, too.
Everybody's going to have one.
Yeah, I didn't know that. Yeah. I had a good track record of those shorts. Mm-hmm. So anyhow, there were so many different things. You got to read the book.
That's the invitation. Love that. Thank you. Well, let's just give some, like, the tip of the iceberg of the stories, because I think there's so much value in the sharing the book. So here, I'm going to start with a couple of questions that have been sent to us. Rafael asks, when Whole Foods was acquired by Amazon, did Whole Foods impose any conditions about maintaining the culture?
Well, we weren't going to be in a position to guarantee anything, mm-hmm. but those were conversations we had with Amazon that, I mean, I will tell you a story that that wasn't in the book, but once we'd agreed upon a price with Amazon, but before I would consummate the deal, I'd already met with Jeff Bezos once, but I wanted to have a follow-up meeting with Jeff to talk about purpose. Mm-hmm. I wanted to know what Amazon's higher purpose was. And I remember the investment banker that was wanting to get a big payday when this merger went through was really upset because they were afraid I was going to screw up the deal. So they tried to get the board to forbid me to go have the meeting. And I told the board, I said, I'm going to go. Now, if you want to fire me, I don't think that's going to be very good for getting this deal done. So I'm going to go talk to Jeff, and there's nothing you can do about it. So I'm going to do it. So I went and talked to Jeff and asked him about Amazon's higher purpose. And he said, our higher purpose is we want to be the Earth's most customer-centric company, meaning we put customers first. We're all about creating value for our customers. We want to do it better than anybody else. We want to have the best prices. We want to have the best service, the best quality, everything that customers love. We want to be that for them. And that was good enough for me. So then the merger happened soon after that. So we did talk about culture with Amazon, and they said, look, we don't want to change Whole Foods. I mean, there's certain things that Amazon we're going to want you to do, certain processes, but you're still going to be running. It's not, our management team was intact. I was still the CEO. I signed a 5-year contract. So, but I have a metaphor for it that I think is a pretty good one. So Whole Foods at that time, I mean, we were one of the 200, we were like the 230th biggest corporation in the United States. But Amazon was like number 3 or 4. And we had, at that time, at the time of the merger, I guess we had about 85,000 team members. They had about 1 million. So we were big and they were bigger. And I said, Amazon was like the sun and we were like Jupiter. We were a big planet, but we were still rotating around Jupiter. And we had lots of moons around us. We had a gravitational pull too. But so in order to maintain Whole Foods' culture, Amazon said they didn't want to change it, but I figured they're going to have such, I saw what happened to these other companies we bought, that we had a gravitational pull, and Amazon was going to affect us. So I started a program at Whole Foods right after the merger happened that we called cultural champions. And we began to incentivize our team members to become cultural champions. And then, so at the time before I left, there was a program that you could go through, and you had to get tested on it. It was all about our higher purpose, our core values, and our leadership principles, 17 leadership principles, and you had to have those memorized, and you were tested on it. So when I got inducted into the Whole Foods Hall of Fame last, when was it? It was just last May, a year ago, just about a year ago. And they told me that they not only had, and I'd been retired then for, I guess, a year and a half. About a year and a half. And they said, John, I want to let you know that we're up to over 40,000 team members now are cultural champions at Whole Foods. And over 10,000, we've created a second phase of cultural champions, another level they have to, and 10,000 have been certified for that. And I was super overjoyed, because that told me that the culture in Whole Foods was really flourishing and thriving, and the current leadership knew how important it was to take care of that.
Oh, that's amazing. That's amazing change. Here's another one. Adrian asks, what was the workers' reaction when they knew Whole Foods was going to be acquired or merged with Amazon?
I think it was kind of like the results, the thing I said about it with the mergers that Whole Foods did. 20% thought it was the greatest thing ever, because they were going to be able to be part of Amazon, and we were going to get certain Amazon benefits that they didn't ordinarily, or they weren't already getting. And about 20% thought it was the end of the world, and that the greatest company that ever existed was going to be destroyed by Jeff Bezos, the richest man in the world. And 60% were on a sort of a wait and see attitude. I don't think Amazon closed the deal completely on the 60%. I don't think they were conscious of that. But because Whole Foods they weren't forcing Whole Foods to change. Whole Foods has been a good partner with Amazon. We've embraced the things they thought were most important while maintaining our own culture and our own integrity. That seems to be fine with Amazon. Hey, as long as we keep producing for the bottom line. Amazon's a more bottom line professional company. As long as Whole Foods performs financially, they're pretty happy with us. Yeah. And Whole Foods has performed well financially.
Yeah, that's true. So here's a question from Villegas. What does it mean to be a conscious leader? Looking around the world and, having that challenge from everybody else, not being that same level of consciousness.
Well, I did co-author a book called Conscious Leadership, so I can't give you the whole book here in that answer, but I did write. Yeah, there it is. What's the subtitle?
The subtitle is Elevating Humanity Through Elevating Humanity Through Business.
Yes, where did I get that subtitle from?
Yeah.
Conscious capitalism, baby. So each chapter represents a different sort of important thing about conscious leadership. And so what I think are the most important ones, first is purpose. Every business has the potential to have a higher purpose. And this is the most important thing to understand, because generally, if you ask people what the purpose of business is, they'll say something like, what do you mean, what's the purpose of business? Everybody knows the purpose of business. The purpose of business is to make money, right? Isn't that what most people believe? But that's a bad answer, because if you ask what the purpose of a doctor is, I don't know about doctors in Peru, but doctors in the United States are well paid. And yet that's not their purpose. Their purpose is to help heal people. Architects design buildings, teachers educate, engineers construct things. All of them can be well compensated, but their purpose is creating value for other people. Well, business is the greatest value creator in the world, and it has to make money. The best metaphor is Ed Freeman's metaphor, I think, about red blood cells. It's like my body has to produce red blood cells or I will die. No red blood cells, death. But my purpose is not to produce red blood cells. It's just necessary to have red blood cells in order for me to live, to fulfill my own purpose. Well, similarly, in business has to make money. If it doesn't make money, it's going to die and it'll cease to exist. So it's like red blood cells. But that's not why business exists. It exists to create value for all of the stakeholders, primarily the customers, but all the rest of them too. And in that way, it helps the culture and the society to prosper as well. The business creates more value than all the governments and all the nonprofits combined by 100x, not even close. So first is purpose. Second is about, about stakeholders, but it mostly means that the leader, the conscious leader, is trying to serve the purpose of the business and serve all of the stakeholders, meaning that conscious leader is not there primarily to line their pockets and make as much money for him or herself as possible. It's not there's anything wrong with making money, but that's not what their primary goal should be. It should be about service to the organization and what it stands for. And then you get into the importance of integrity. Integrity means not just doing what's legal, but doing what you know is right. And it means telling the truth, not spinning things. Corporations in America, I don't know about Peru, but corporations in America are too much run by their public relations teams where they're always spinning everything to the, they're not always dedicated to telling the truth, but spinning a narrative that makes them look better. And I just think that's fundamentally a type of lying. I just think that you should be honest and have integrity, tell the truth, try to do the right thing in all circumstances. And the final thing I'll point out in here, a conscious leader, I really believe love is the most important thing in life. Love is the meaning of life, ultimately, in my opinion. But yet in our corporations, love is locked in the corporate closet because love is seen as sort of weakness. It's oftentimes seen as it's seen as more feminine. It's seen as not masculine. It's seen as weakness. It's not seen as strong. There's nothing more stronger than love. Love is what creates loyalty. Love is what holds the organization together. Love is why people will stay there and work year after year, decade after decade. And yet it's hidden away. It's locked up. And so people they're supposed to check their purpose, their integrity, and their love at the door. And that's what corporations need more than anything. And so that's what a conscious leader does. A conscious leader is leading with love. The conscious leader acts with integrity. The conscious leader cares about all the stakeholders. The conscious leader has a high sense of purpose.
And that's so important. Love is in the subtitle of the whole story. And there's a whole chapter of how leaders could express love in a business environment in this book. So recommendation for all that are listening to us, right? So here's another question. Gisela says, beginner's mind seems to be the key to open up listening and learning. Ego is a big factor in leadership. Have you dealt with this challenge between ego of the business or the eco working for the whole system?
Yeah, I mean, of course, everybody has to deal with that. But if your ego gets out of control, then you're not going to have a beginner's mind. In fact, you're hurting your company when your ego gets too big because you stop listening, you stop learning, you think you're better than other people. You're getting stagnant. You're going to make a lot more mistakes because you're not going to be open enough to listen to others and change direction if you need to. So I think ego, I've seen it happen particularly for a lot of entrepreneurs that get too much success too early. They start thinking they're better and smarter than other people. And that's that's a step down the path of destruction, if not immediately, eventually. So I really do believe humility, humbleness. That's not mean you're not self-confident. It doesn't mean that you're not powerful and strong. It's kind of like we need this more evolved leader who's both strong and vulnerable, who both has courage but humility. we need sort of the yin and the yang, the male and the female. All of these virtues need to be synthesized together. And so ego is one that can be highly destructive to yourself personally. Who likes to hang around with somebody with a big ego?
Yeah.
I mean, I don't. They talk all the time. They don't listen. They're boring. Uh, so yeah, ego. You got it. You won't. If you're going to be a good leader, you have to master your ego.
Yeah.
Or put it another way, the ego should be in the back seat of the car. It shouldn't be driving the car.
Mm-hmm. So that here comes one of the stories that you mentioned in the book, where the public sector actually, or the policies from the public sector actually affected your business. What's the limit of the public sector influencing the private sector, influencing the public space?
I'm not quite sure I understand the real intent of that question. I mean, the private sector should not be bribing the public sector, which it frequently does, to get laws passed that hurt their competitors and help themselves, or gives them quasi monopolies. So we see that happen all the time, and that's very bad. That's, in my opinion, unethical and lacks integrity, but nevertheless is not uncommon. And if you have too much business and public collusion, then you have corruption.
Mm-hmm.
One of the most interesting things that's happened, in my opinion, politically, with the new president, Trump in America, Elon Musk starting up this Doge investigation of government, where the money's going in government, has exposed hundreds of billions of dollars of corruption. And it's such a needed thing, because when government and business collude, I guarantee you there's massive corruption, and it undermines the fabric of society, undermines the efficiency of markets, and leads to it goes against progress.
Yeah. So I think the question is more not in terms of the driving the corruption side, but how can conscious businesses, conscious leader influence a better policy, a better political space? Because that's the challenge. Because if we as conscious leaders don't do anything, the egomaniacs might take it over, and
Well, we need, you can't ask business people to do everything.
Yeah.
But what you're saying is we need conscious politicians. Well, we do. Of course we do. We need conscious leaders everywhere, not just in business. We need them in education. We need them in science. We need them in politics. We need them in government. We need them in law. We need them everywhere. So, but you can't ask business to solve all the world's problems. It has enough on its plate. You're going to have you have consciousness in other parts of your society too.
Mm-hmm. Because we see a lot of countries being challenged with weak public institutions, and the private sector is just like sailing along and not actually helping structure this. It's different in the US. You have a much stronger, institutions to preserve some of that order.
I hope so. They've been challenged a lot in the last 30 or 40 years.
That's true. That's you start showing some different, the system is working not as we expected, and I think that's a challenge when it gets exposed. People start asking more questions. Which advice would you give a company leader in order to cultivate and safeguard the company culture? This is from Mauricio.
Well, that's a good question. I'm going to say 2 or 3 things about it that I think are all important. The first thing is, don't take your culture for granted.
Mm-hmm.
And one way to think about a culture is that it's like a garden, and you have to cultivate your garden. You're going to have weeds in your garden. You got to pull them up. When you start getting weeds in your culture, don't let them grow. Pull them up. And most CEOs don't pay enough attention to culture. They delegate that out to their human resource department. when I think the CEO should be the chief culture officer as well, because culture is so important. It's not something that should be delegated to anybody else. It's something you have to pay a lot of attention to. You have to see the weeds popping up in your garden, and you need to pull them up before they spread and rot out the healthy vegetables that you're trying to grow there. And secondly, people, this is just a simple truism, but it's so true. You have to walk the talk. You have to embody the culture yourself. People will not, they were going to pay attention to what you do and how you show up a lot more than what you say. And if your deeds don't match your words, they're not going to believe you. And so you can preach all you want to, but if you do things that are the opposite of the very things you're talking about, you're not going to have any credibility, and that's going to really hurt your culture. So it's very important that the CEO and all the senior leaders, that they actually embody the purpose and the values of the company. That's what I talked about. The conscious leader has to be a servant leader, because they have to put the good of the company, the values of the company, they have to put that first. That's why they're the leaders. As you said in that quote from the Simon Sinek book, leaders eat last.
Yes,
it's true. They have to be serving that higher purpose of the organization. If they don't do that, then no matter what else you say, it'll have a lot less impact.
Yeah. So I'm aware of the time. I'm just going to send you another 2 questions. One from Mauricio. When you prioritize stakeholders, where do you start? Which stakeholders should be?
Great question. I have definite views on that. So the first thing is, all the stakeholders matter, but they're not all equal. And conscious capitalism it's not a philosophy of economics, and it's not a philosophy of governance. It's a philosophy of management. It's a better way to run your business. So I want to take politics and all that stuff off the table, because I really feel like conscious capitalism has been politicized in some ways by the people that hate capitalism, the anti-capitalist. They're trying to weaponize it against the owners and the investors. So to me, it's obvious. The most important stakeholder, it's hands down the customer. That's why the business exists. No customers, no business. If you don't have customers, there is no business. So, and secondly, the owners are the second most important stakeholders, because in many small businesses, those are the only 2 stakeholders there really are. I mean, in a sense, there is no employees, because the owner or their families, they're doing all the family business. They're doing all the work. They're the owners and they're the workers, and they're serving the customers. End of story. But I think as you grow, you begin to hire employees, and they're the ones that interface with the customers. So then I say the employees rank third, and then the suppliers, because you're no better than your supply chain. Your suppliers, I then rank fourth. The communities are fifth. But they all matter. They're all important. And those stakeholders, what they all have in common is they are all voluntarily exchanging with the business for mutual gain, right? Suppliers are trading with you, employees are trading with you, customers are trading with you, investors are trading with you, and the communities that you're part of are trading with you. So then you have a secondary group of stakeholders who are not voluntarily trading with you, such as critics, activists, the government. Government can sometimes be a primary stakeholder as well, depending on your business. If you're in the defense industry, then you're probably trading with the government. So it depends on the business, but I'm thinking about it from a Whole Foods perspective. And you have activists, you have critics, you have journalists, you have the media. These are all people that have a stake in some sense in the business, but they're not necessarily trading with you. These are secondary stakeholders. They matter too. They all matter. But clearly, I've given you my priorities. The customers matter the most. And if you forget that, well, your business is going to suffer as a result.
Yes. So just to finish our conversation here, beginning you shared that all moving from one college to the other one was almost like trying to search the meaning of life.
Right.
leaving Whole Foods, getting out of that and starting Love Life.
Right.
Did you find it?
Find what?
Meaning of life.
Well, I found that a long time ago.
Good.
The meaning of life is love. I've already told you.
Wow.
When you get to your deathbed, when you're on your last deathbed, you're not going to be thinking, I wish I'd made more money. I wish I'd had more success. I wish I'd been more famous. I wish I'd had more power. You're going to be thinking about your relationships and the people you love. You're going to be thinking, I wish I'd told my father how much I loved him before he died. I wish I hadn't gotten alienated from my daughter. I wish that I had gone and asked her to forgive me. I wish I'd been more thoughtful towards my grandmother. I was so rude to her. You'll be thinking about your relationships. You'll be thinking about the people that you love, because that's what matters most in life. Love, family, friends. And if you forget that and go after something else, you're probably not going to be very happy.
So I have to ask another one. How much is enough? Because you worked for a long time for $1 a year.
You need more than $1.
Yeah, but you had enough.
I had enough. Yeah, sure. I mean, everybody has to figure that out themselves. I remember how I said you have to embody the purpose of the company. When I stopped taking compensation, everybody could see clearly that I wasn't doing it for the money. I was doing it because I loved Whole Foods and I wanted it to flourish. And I was giving away all my stock options to our foundations. I had enough money. I had enough money anybody would ever need. And so then it enabled me to fully express myself without people always second guess, well, he's doing that because he's just trying to make more money for himself. I just took that off the table. I'm not saying anybody should do that, but that was the right thing for me to do.
Yeah. Yeah. John, thank you so much for your time. Thank you. We have a couple of more questions, but I don't want to, extend beyond what we agreed here, for the time you're offering us and sharing all this, experience, and I invite everybody to take a look. Whole story is out there.
I don't think that's been translated into Spanish yet, though.
Not yet.
Hopefully it will be.
Yes.
But Thomas, thanks for inviting me. I wish everybody well, and I wish for you great happiness and much love.
Perfect. Thank you, John. Take care.
Adios.
Adios.